Hey everyone, welcome back. Happy New Year. Happy 2023 to everyone. One of the coaches at Unga Academy here, and this is the chat that we have every weekend about the market trends over the past week. But before we look together at what happened and how the new year started, I'd like to remind you to please subscribe to our channel and go and activate that notification bell, as well as leave us a like to this video. Thanks so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Alright, so we can say that the European stock indexes had a bubbly start. We immediately see an excellent start in this 2023 for the Euro stocks. The DAX has also been doing well, up by 4%. Wow. A little further behind, well, much further behind, the US stock markets, negative returns for the Nasdaq, and essentially on par for the mini SP 500. 3-month returns, we immediately see the difference between the negative 6% of the Nasdaq and the positive 18.76% of the Euro stocks. Now, that's an uncommon thing. I'd say it's the first time we've seen such a big difference in performance between the European stock markets and the US stock markets, which are usually a little bit ahead of the European stock indexes. On to the bond market, we see positive returns for both US and European bonds, but again, Europe has the upper hand. We have the Bund, that's up 2.8%, so definitely a good start for the Bund. Let's see, the T-bond, up by 1.56%, also doing well. A little further behind, the US 10-year bond at positive 0.72%. The energy market suffered the biggest losses this year so far. The worst performer, natural gas, which has been on a downtrend for several months. Heating oil has also performed poorly. Crude oil looks a little better at negative 4%. And the ones that performed a bit better, well, certainly gasoline. Let's take a look at the metals. We see a positive return, well, except for silver. We got a positive 1.96% for platinum. All metals are in an uptrend. Let's just take a look at the 3-month returns. 14, 17, plus 11, plus 6. Only gold is a little further back, but it is close to its recent highs, which are crossed this week. Bad performance for the livestock market, especially lean hogs, negative 7% in the last 5 days. Wow. On to the soft commodities, and there we see some mixed results. In particular, there's a negative 5% to report for sugar. So sugar is at negative 5%, a nice downward trend. A negative 4.8% for coffee, approaching its recent lows. On to the grains, we see negative returns with the exception of soybean meal, which is perhaps the strongest market amongst the grains. We see 5-day returns at positive 3%. 1-month returns at positive 6.7%, 3-month returns at positive 22%, and 1-year returns at positive 37%. The others, as I said, are all negative, in particular soybean oil. Another soybean derivative is down 5.54%. We've got a strengthening US dollar on the currency front, especially against euro this week. The last value reached 1.0579, and also against the British pound. All right, finally, crypto. Bitcoin up 2.16%. And we see that Bitcoin is losing some volatility at the moment. We haven't seen double-digit weekly returns for quite some time. So we are certainly still dealing with a weak market, though. And right now, there is no sign of the market recovering. It is also true that we're approaching the halving of Bitcoin. It will take some time, but who knows, maybe 2023 will be the year of the recovery for the cryptocurrency market. We wait and see. Let's also take a look at the volatility of the stock indexes. In particular, we see very high volatility in the Euro stocks and DAX on a 1-month time horizon. We see historical volatility levels close to the last month's highs precisely because of these solid bullish movements that we've seen. In contrast, volatility is much lower in the Nasdaq and the mini SP 500. However, on an annual basis, we find relatively low volatility levels, especially for the Nasdaq and the mini SP 500. A little bit higher, especially for the Euro stocks. On to the implied volatility term structure. We're in contango, except for the 9-day VIX that is a little bit higher than the 1-month VIX. Otherwise, the volatility structure shows no sign of anomalies or tensions. We do know that this is an excellent indicator of traders' fears about the immediate performance of equity markets. So with that said, there's nothing special to report at the moment. Let's also go and take a look at the VIX. Now, the last value reached was 22.13. This is abundantly in the lower range of values reached in the last year. Alrighty, on to the rollover calendar. Next up is the rollover of the VIX future, which we know usually rolls over a week before expiration. So as early as January 12th, we'll be able to roll over this future. Crude oil will follow the next week after that. Well, that's it. Alright guys, that's it for today. Thank you so much for watching. Before we say goodbye, I want to remind you that if you're interested in systematic trading, you can watch a free presentation by Andrea Unger. We'll leave a link in the description of this video. And in that presentation, Andrea Unger explains his trading method that allowed him to win the World Trading Championships 4 times. You can also get the bestseller, The Unger Method, by just covering the shipping costs. Or you can even book a free strategy consultation with a member of our team. So please, do yourselves a favor, take advantage of that. And finally, I ask you to please leave us a like to the video. Remember to subscribe to our channel and go and click on the notification bell as well. With that, have a fabulous weekend, everyone, and we will see you next week. Bye-bye for now.